Okay. So just to again for the in your exam. Okay. Nikita, can you read?
Yes, sir. On 11th February, Maruti Suzuki India Limited is trading in capital market segment cash at rupees 8,737 and following contracts are available in F&O market. Expiry date lot size LTP 24th Feb 2022, lot size 100 LTP 8,735. 31st March, lot size 100 LTP 8,772. 28th April, lot size 100 LTP 8,804.
Okay. Now, 11th of February, you found that Maruti was trading in the cash market at 8,737 rupees. And following contracts are available in the future and markets of the stock exchange. So there are always three contracts which are open. One which is going to expire in the current month, which is called the near month. Another contract which is going to expire the next month, and then the far month, which is the April month. Okay, and lot size of Maruti is 100, and the last trading price, which is called the LTP, which is trading in the future exchange, was 8735 for 24th February expiry, and for 31st of March it was trading at 8772, and on 28th April, this is the future price. Okay, so Maruti future is trading at 8804 for 28th April expiry period. Okay, is that all clear to you? So let's go forward. Now there will be a graph which will be given to you, the share chart. The first chart, if you look, is the MACD chart. Okay, the top chart is MACD, and this chart is a share price chart, which is having basically. So let's understand the MACD. Okay, so MACD is basically moving average. This thing, advanced moving averages chart, which is having 12-day and 26-day and 9-day signal line. Okay, fine. So this black line is called the MACD line. Okay, and red line is called the black line is the difference between the 12 and 26-day moving average, and red line is basically the moving average of the MACD itself. Okay, fine. Now tell me, if you look at the MACD chart, what it is suggesting, that the MACD is over and above the signal line. So whenever MACD line is over and above the signal line, it tells you that the stock is in a bullish mode. Okay, but before we do that, okay, we look at the ADX. So this is the ADX chart. Okay, whether you should follow the MACD or not, it will be determined by ADX. Now, where does the ADX is at the moment, Nikita? At what level it is? Can you just read somewhere?
So 29.48.
And what is the trajectory? It is, it is going up from a lower levels from 12, it is moving to 29. So if you go
Yes,
back,
sir.
yeah, if you look at this thing, okay, let me just open this. Okay. I should have put this slide right there. Yeah. Okay. No, this was not the slide, so I should put fourth one. So I go to the ADX straight away, okay, and pick up this number, okay. And just I'm copying into my slide which I'm presenting at the moment. This one. So I'm just putting right at the back of this slide so that we can. So Nikita, tell me, if you look at any of you, okay, tell me, what does ADX is suggesting of Maruti? What should we do? Basically, ADX tells you about, the move of the stock. whether it is trending or whether it is range bound. Okay, when you look at ADX, it tells you whether whether the stock is trending or it is range bound. So whenever it is trending, we use always the trend following indicators like MACD. Otherwise, we use oscillators. So what is the ADX telling you? If suppose we say that the Maruti Suzuki ADX is telling you that it is going up and going touching 30, okay, from a bottom of 12, this, if you look at this move, Maruti's ADX is telling you that it has moved from, say, somewhere in January of, at the beginning of February it was close to about 12.5, and now it has gone to close to about 30 or 29. So just read, what is ADX telling you? What should we do after looking at the ADX?
Sir, it's trending.
It is trending. So that means, either you look at point number
I
two,
can.
yeah, or three. So ADX rising from 15 to 25 from the lower level means trend is strengthening. Okay. Use trend following indicators. And ADX above 30 is interpreted as a strong trend. So, this chart of Maruti is suggesting that we are, I mean, up to that point of time, it's saying that we are, if it crosses 30, so we will be in a strong uptrend. Okay, fine. So what should we use basically here? Which indicators we should use? The trend following indicators or oscillators?
Trend following indicators, sir?
So trend following indicator is nothing but the MACD. Okay. So we are in the right chart. We are using the trend following indicator, which is MACD. And MACD is telling you that the MACD line is above the signal line. Okay. Which is a bullish pattern. Fine. So if you look at it, it's almost at same, and we see that it has again crossed up. So what is it saying that and even if you look at the histograms here, the histograms are basically were up here, but they are losing momentum here. Okay, and then again look at the price chart here. This is the price chart. Okay, and this is the 26-day moving average, and this is the 12-day moving average. So 26-day moving average is above the 12-day moving average. Sorry, the 12-day moving average is above the 26-day moving average, and even the share price is above the moving averages, which is a bullish formation. Okay, so all this is basically suggesting that Maruti is going to go up rather than to go down, isn't it? So I just repeat again. First, we look at the ADX. Now, ADX is showing this reading that it is going up from our lower levels of say 12 or thereabout to 29. Whereas, the interpretation of ADX says that if you look at the point number 2, that, if it is rising from somewhere from 15 to 25, then we should use the trend following indicator. That means it is saying that the Maruti is trending. Okay. Now, which way it is going up, we can only look at the price chart and determine. So the price chart tells you that Nifty is going up. So if you look at the price chart here, you find, sorry, not Nifty, but Maruti Suzuki, it's going up. So it's going up, you can see as it is. And both the moving averages are below the share price chart, which is forming a bullish pattern. And even the ADX is confirming that, because this black line is called the MACD line, which is the difference between 26-day moving average and 12-day moving average. Okay. And the red line is called the signal line, which is the moving average of the MACD itself. So even the faster line, which is the MACD line, is above this lower moving average, suggesting that the Maruti is on an uptrend. So if that is the case, what should we do? Should we take a long position or should we take a short position?
We have to take a long point.
So now the question is basically, now after looking at this, ADX is currently is trading and showing a reading of 29.48. Maruti Suzuki Limited future prices are given below at various states. So in future, I have given that on 2nd of March, Maruti was trading at 8890, and on 7th of March, it was trading at 9010. On 10th March, it was trading at 9050, and 31st of March, it was trading at 9040. So what is happening to Maruti? It's going up or going down by looking at this price?
So it is going up.
It is going up because if you see the price, the cash price was 8,737, and even the future price, look at 8,735. So it is going up basically. Okay, so we should take a long position now. Now this is what you are required to do. Now Nikita, can you read, or Bharat, can you read this? What you are required to do in this question?
Required. Briefly discuss the chart patterns and formulate a trading strategy.
Okay, so now the first question will be you have to discuss the chart patterns and formulate a trading strategy. Fine. So if you look at here, you know, you now have to look briefly discuss the chart patterns. Okay, Nikita, can you read this? Or Bharat, can you read this? Udit, can you read?
Yes, sir.
Yeah, Udit, I'll ask Udit to read, please.
Yes, sir. Briefly discuss the chart patterns and formulate a trading strategy. MACD line is trading above the center line, indicating bullish development.
Hold on.
MACD line.
Hold on. This is called the central line. If you look at this is called the central line. If the MACD line is above the central line, okay, which indicates a bullish development by itself. Okay, so at this point of time, is the MACD line above the center line or below the center line? This is the center line. Okay, so at this point, what is happening?
So MACD line is below the center line.
But currently, what is the position? Is the MACD above the center line?
Yes, sir, it is above.
So MACD line is trading above the center line, indicating bullish development. Okay. So this chart is given to you, and this is the central line in between. Okay. Fine. And next, please read. Next box. Udit.
Yes, sir. MACD line is above the signal line indicating bullish move.
So even the MACD line is above the signal line. The red line is called the signal line. Okay. So this is above
Yes.
the MACD line is above the signal line, and MACD line is above the center line. So both are telling you that the Maruti is in bullish mode. Read that last one.
Histogram is indicating momentum is slowing down.
Histogram is actually indicating, not in. So in this histogram is indicating momentum is slowing down. Okay, because if you look at the histograms, they were very big here. Okay, so there was a lot of here. Then the gap was also big between the signal line and the MACD line. But thereafter, the momentum has lost a bit. Okay, fine. So this is only basically a kind of a downer here. But these two are telling you that the stock Maruti is basically in a upward move. Okay, so histogram is only downer, whereas two indicators are telling you that it is in bullish mode. Okay, first,
Sir.
uh,
Sir, histogram is telling about the volumes,
no,
right?
no, it is not the volume. It is basically the difference between the two this thing. Okay,
Okay, two lines.
two lines. Okay, so if you see here, if the histogram is big, there will be a big difference between the two lines. Okay, fine. Here also it
Right.
is big, but now here it is bit petered out. So there we have small histograms. So histograms are also very important to look at. Okay. Now there may be a case where you may think that histograms are very important, so you may not go for a long position. Okay. But since we have to take a position, so if we have to take a position based on the two indicators which are suggesting that Maruti is going to go up, you can either ignore it, or you can, if you don't want to ignore, you can say that I will not like to take any position at the moment. Okay, fine. So this will be your call basically. Okay. Now coming to here, just read this, Udit.
Yes, sir. 12, 12-day exponential moving average is about 26-day exponential moving average indicating bullish pattern.
Hold on. Now, if you look at which is a short day, 12 is a shorter day moving average, and which is the long moving average, 26. So the short term moving average is above the long term moving average, which is indicating a bullish move. Okay, Fine. So whenever the short-term moving average is above the long-term moving average, as you can see here, which is the shorter one? The red one or the blue one? The blue one is 26 and
Blue ones and
The blue ones.
blue one is what?
the short term.
No, look at blue, it is 26 and red is 12. So red is 12, this is 12 and this is 26. So which is shorter one? The red or blue?
Red, sir.
Red.
So if red is above the blue, indicating that the shorter term moving average is above the longer term moving averages, which means it is a bullish pattern, isn't it? So that is one. The second
Yes, sir.
confirmation is the share. Okay, can you read Nikita here?
Share price is above the 12-day exponential moving average, also indicating bullish position.
So now the share price is itself above the 12-day moving average. So which is confirming a bullish position, isn't it? So the two indicators are telling you that the market is on an up, the stock is on up move. Then Nikita, can you read the third box?
Volumes are not encouraging, indicating low volume in last few days.
But only thing is that the Maruti is going up, but on lower volumes. Okay, the volumes are not shown any kind of a big change. Okay, the change happened here, but then the volumes have dried up a bit. So people are buying, less people are buying, but the stock is going up. Fine, which may signal that the up move may come to an end very soon. Okay, fine. So, but the two these boxes are saying that the stock is going to go up, but the volumes are drying a bit. Okay, now you can take a call. Either you want to take a long position or short position. Okay, or sorry, you can remain out of the. Don't take any position at all because the volumes are not very showing a very encouraging sign because the volumes are showing a somewhat decline, not very decisively because the volumes are almost like in this range only. Okay, it's not that the volumes have gone dry absolutely. Okay, fine. So now we come to the ADX. Read this, Nikita.
ADX rising from 15 to 25 from the lower levels means the trend is strengthening. And next also,
Next also.
ADX above 30 is interpreted as strong trend but still shy of 30 mark, indicating to use trend following indicators.
So that means we should use trend following indicators. So we have already seen that these are the trend following indicators. So which is basically the first is the MACD itself. The second is the moving averages. Okay. Both are suggesting that the stock is going to go up. Okay. Fine. Okay. Let's read this.
Based on the chart patterns, it is advisable to take a long position in mid-month, that is March. Long position, 1 lot Maruti, 31st March 22.
So that means you are going to take a decision here basically. Okay. So it will all depend upon you what position you are going to take. So you take a long position. Fine. Like in my case, I interpreted that though of course I mean two indicators are telling you that the Maruti is bullish, but the volume as well as the histogram are not supporting that. Okay. But still, if we have to take any position, it has to be a long position. So I took a long position, 1 lot Maruti, 31st of March, okay, which is going to expire on 31st of March 2022. Okay. So now, there will be a question. If you go back to the question here, what is the second question? Can you read that?
Is MACD a leading indicator or a lagging indicator?
So tell me, what is MACD? Is it a leading indicator or a lagging indicator? Now, the answer is written here. Okay. Read it.
Moving average convergence divergence MACD is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26 period exponential moving average from the 12 period EMA.
Read this.
Is MACD a leading indicator or a lagging indicator? MACD is a lagging indicator. After all of the data used in MACD is based on the historical price action of the stock. Since it is based on historical data, it must necessarily lag the price. However, some traders use MACD histograms to predict when a change in trend will occur. For these traders, this aspect of the MACD might be viewed as a leading indicator of future trend changes.
Okay, now here there's a very important thing, the histograms. Okay, so histograms can be still viewed as a lagging, as a leading indicator. As we have seen in the chart, the histograms are showing some weakening of the trend. Okay, but we are still ignoring it at the moment. Okay, okay, read this.
Trading in the direction of a strong trend reduces risk and increases profit potential. The average directional index ADX is used to determine when the price is trending strongly. In many cases, it is the ultimate trend indicator.
So basically, what is ADX? It is a trend strength indicator. So it tells you, whether the market is trending or range bound. Okay, fine. So once we check the ADX, then only we can go and use those, indicators which we have seen, either the moving averages or the MACD. Okay. So now, if you just go back to the question again, read the third part. What is?
What is the use of ADX indicator?
Okay. So we have already read that. Go to the
Yes, sir.
D point.
According to your assessment, when the investor should square off its position.
Okay. So, so let's look at this. Read this.
Long position 1 lot Maruti 31st March 22 rupees 8,772. Deposit margin span rupees 2,03,139. Exposure margin 30,182.
Okay, hold on. I have not given these figures in the question, so I'll put these figures in the question so that you can write that he is going to deposit this money. Okay, fine. Next.
10th March Maruti futures is trading at rupees 9,050. Square of the position on 10th March by short position 1 lot Maruti 31st March. Profit earned 9,050 minus 8,772 into 100, which is equal to 27,800.
So now when you look at this, look at this point. Okay. So some data was given to you. So on 2nd March, it is trading at 8890. On 7th March, it is trading at 9010. On 10th March, it is trading at 9050. And on 31st of March, it is trading at 9040. Now, 31st March is the expiry day. So you will not like to, go for delivery. So you like to, come out of the Maruti at a day before that. Okay. On 10th March, you find the Nifty, the Maruti is trading at 9050. So you are still making a gain. So what you'll do, you will square off your position on 10th of March based on the data which is given to you. Okay. So if you do that, what will be your profit? 9050 minus 8772 into 100 because lot size is 100. So you're sitting on a profit of 27,800, isn't it? Have you followed this? Odit, Bharat,
Yes, sir.
is it clear to all of you?
Yes, sir.
Okay. Now look at the last question of this. Okay. Nikita, can you read?
How can investor prevent physical settlement or he can eliminate the risk of physical delivery?
So the last question was this. So what is your answer, Nikita? How can investor prevent a physical settlement?
Sir, by squaring off before the expiry date.
Absolutely. So this is what is written here. There's an answer. Okay, read this.
For investors involved in futures contract, an offsetting position eliminates the need to receive a physical delivery of the underlying asset by selling the associated asset to another party.
So basically, if you want to avoid physical delivery, you have to square off your position before the expiry. Okay. So if you do that, then you can avoid the delivery. Okay. So I'll just take back you again to the question. Okay. So what will be there in the question? I'll be making some modification to this. So the share price will be given to you, the cash price, and the available contracts in future and expiry, the 3 contracts will be given to you. Okay, you have to choose one. Then there will be some share prices which will be given to you. The chart will be given to you, a MACD chart and a share price chart and the ADX. Okay, now you must remember this in order to interpret. Now most likely you will be getting ADX line which is very near to the where you will be required to use only trend following indicators because we haven't done stochastics so far, okay, or oscillators. So you have to interpret the ADX and decide which way you're going to go. Based on the ADX interpretation, you're going to take position, and based on the chart patterns. Now, so some data with regard to the price data will be also given. Since ADX was not very clearly visible on the chart, that's why I have given separately in the question that ADX is currently trading at 29.48. Suppose you are unable to read this figure from the chart, then it is given separately here. And the dates, some prices of future price of Maruti will be given to you. So based on whichever is the highest price, you're going to square up on that day. Okay. So out of this, which is the highest price, Bharat?
So 10th March 950.
And since you have taken a long position, so you like to square up on the 10th March and get the maximum profit out of it. Okay. So these are the various questions which will be given to you. What is MACD? What is ADX? Okay. And how you can prevent your physical delivery. Okay. So first read the MACD. Okay. And discuss, the MACD, what the MACD is telling you. And then look at the chart pattern, what it is saying. Okay. You have to briefly describe that. Okay. So here basically, this is the chart of the share price chart, and these are the two moving averages, which is telling you that the Maruti is in uptrend. But the volumes are not suggesting the same, okay, and nor the histograms, which is basically, not a good sign that we should take a long position. But even if you take on assumption a long position and calculate the profit, the answer will be right. But maybe in practical life, you should actually avoid taking any position, okay? Because the volumes are not showing encouraging signs, nor the histograms. Okay, histograms are more, to predict the future of the stock. So they are more of a leading indicator rather than the lag indicator, as it has been said here. Okay, fine. So if you can just read this, the last one, which was basically that the histograms, people normally use traders normally use histograms to predict when the trend is going to, end. Even the volumes also basically are telling you an indication that what are the volumes telling you, Nikita?
So volumes are reduced.
Volumes are reduced.
That means
So volumes are showing a little
it's
bit drop compared to the earlier days. Okay, so if people are buying more and more, okay, if the share price is going up, but it is not supported by the volume, which means that something is wrong. So less and less people are buying, though the share price is going up. So which is a divergent indicator. That means the trend is soon going to end. Okay, because the price trend is not supported by many people participating in the market, which means that. Okay, fine. So that's it. Any questions, please? So if I give a question like this, you will be able to do it. Are you comfortable with such kind of question? Prove
Yes, sir. It is comfortable.
it is comfortable. Okay, so because I found there's no question in any other textbook like this. Okay, so but when you watch all the business channel, they come up with these charts and they describe the charts and they say because of this, because of these chart indicators, they're telling that we should take a long or short position, and then they take a long. They advise people to take either long or short. So basically, this question test all your knowledge, but I'll keep it very simple so that you people don't have to struggle much. It will be a simple chart to follow, and you will be able to answer the question very easily. Okay, fine. You can always write, like I said, histogram and the volumes are showing signs of weakening of the trend, but you are still assuming that the markets are going to go up based on the chart patterns, and you are taking a long position. So if you mention that, so this will be an additional input to your answer. Okay, is that clear?
Yes, sir.
Okay, so now I'll be taking attendance. Okay,
So what is a red line represents?
which one? Red line.
Yes, sir.
Okay, so I'll just go back to this. Sorry. You're referring to this red line, isn't it?
Yes, sir.
So basically, if you look at, it is described here in my answer. So I'll be sharing this slide with you very soon. Uh, okay, so it's not written. Okay, I'll just explain here. So this is basically, this black line is called what? First of all,
26 to 12 day moving average.
this is called the MACD line. The black line is called the MACD line, which is the subtraction of 26 minus 12. Okay, fine. So the black line is nothing but a moving average of 26 day moving average minus the 12-day moving average. Okay, so that's the MACD line. Now the red line is the 9-day moving average of the MACD itself. So I'll just repeat that. The black line is the MACD line, which is the difference between the 26-day moving average and 12-day moving average. It is plotted separately on a chart. Okay. Now the 9-day moving, the red line is basically the moving average of the MACD line itself. Okay. So a red line is called, a slow line. Okay. And the MACD is a faster line. So when you look at, a short-term moving average and a long-term moving average, so MACD will assume that it's a short-term moving average and the red line is a longer-term moving average. So in this case, whenever the short-term moving average is above the long-term moving average, we say there's a bullish pattern. So here the MACD line is above the 9-day moving average of the MACD line itself. So we say that it is in a positive direction. Okay. And okay, so what I'll do, I'll just show you this. Okay. So just see this part 4, which is with you only already. Okay. Okay, Nikita, can you read this? Just will take 5 minutes.
The moving average convergence divergence MACD is one of the most well-known and used indicators in technical analysis. This indicator is comprised of two exponential moving averages which help to measure momentum in the security. The MACD is simply the difference between these two moving averages plotted against a center line. Moving average convergence divergence MACD 12, 26, 9. The formula MACD is equal to difference between the value of 12-day and 26-day EMAs. Then a 9-day EMA of the MACD line is superimposed as the signal line.
Okay, so basically, look at this here. So this is the price chart, okay, and the two moving averages, which is 26 and 12, and below is the MACD, okay, with a signal line. Fine. So whenever and this is the center line, okay, this is the zero line, if you see, okay, this is called the center line. And whenever, why this is called zero line, whenever there is a crossover happening between the two lines, okay, so this is shown as 0 here. Fine. The difference between these two, 40 and 38 is 2. Okay. So here also, if you see, the difference is 2 here. Okay. So at this point, the difference between the two lines is 0. Okay. So if you look at here, at this point, the difference between the two lines is 0. So it is coming here. Okay. Fine. So MACD is passing through 0. Okay. Here also it is 0. And here also it is 0. Okay. So wherever the crossover are happening, which is indicated by 0. So whenever the crossover happens, okay, so the MACD line will touch the central line. Okay, fine. So it will cross over from say from 0 to say above 0. Okay, so this is nothing but the center line. So please watch the video which I have given to you, so you'll understand very carefully. Okay. Okay, just look at this. Nikita, can you read?
The center line is the point at which the two moving averages are equal.
So whenever the two moving averages are equal, okay, that is called the center line. Fine. Look at this again. So whenever there is the two lines are coinciding, okay, so that is the 0 point, this point. Okay. Because the difference between the two is 2, and here from 0 to this point is 2. Okay. So as the two lines are widening, you will find the MACD line is also going up and touching 2, which is nothing but the difference between the two moving averages. The difference between the two moving averages is how much? 2. And difference between the center line and the moving average, the MACD line is how much? 2. Here, what is the difference between the two moving averages? Here, what is the difference between the two moving averages, Nikita?
0.
So that's why it is crossing over here. So when the MACD line crosses over the 0 line, so that is indicating that the shorter term moving average has crossed over the long term moving average. Okay, exactly. Here also, if you look at here also there is a crossover, but it has crossed over down. So here the MACD line has crossed below the center line. Okay, isn't it? This point. Again, once here, what happens here? The moving average, the MACD line has crossed over the center line. Look at here. The two moving averages crossed each other, and the shorter term moving average has crossed over the longer term moving average, and it has crossed over center line. So this, whenever the MACD line crosses over the center line, indicating a bullish mode. Because here, what is happening on the price chart, we find that the short term moving average has crossed over the shorter term moving average, isn't it? The shorter term moving average is above the long term, which is indicating a bullish here. And here also it is telling the same story, isn't it? Have you followed, Bharat?
Yes, sir.
So the black line is nothing but the MACD line itself, and whenever it crosses over the central line, which means the shorter term moving average has crossed over the longer term moving average. Okay, so that's why I said when you interpret the MACD line, whenever it crosses over the central line, that means the bullish time has begun for the stock. Okay, is that clear, Nikita? Udit?
Yes, sir.
Yes, sir.
Okay. So this is what the MACD line. Any other question, please? So we are going to close now, and I'm going to take attendance. Okay. So you can watch the video. Okay. For so I'm just going to stop it here.